Here we go. So, today I want to go over some questions that I've gotten from people recently. Okay, so today we are going to go over some questions that came in from some employees and actually some staff about health insurance and the health insurance marketplace that many people are not familiar with. So, some of the questions have to do with how are the rates? What makes the rates? Where are the rates coming from? Does everybody get the same rate? How does rating work? What if I have current treatment? Can I continue my treatment? What if I've been sick in the past? Is that going to raise my rate? And so on. Also, what is preventive care? What does that mean? Why isn't this lab work covered? And so on. Are pre-existing condition limitations excluded? What if I have cancer? Can I go onto a health plan, or is that condition excluded? And what is happening to the U.S. population? Is this overall, when was the last time health insurance rates went down? This is a question I got asked recently. So we're going to dive into these questions. I'm going to answer them all for you. Stick around until the end. I'm going to get into the nitty gritty and let's dive into it. So first off, what are health insurance rates based off of? So health insurance rates are based off of, I should preface this, most health insurance rates are based off of your zip code and your age, period, end of story. So since ACA came out in 2010, a lot of the changes were released in 2012 and 2014. Prior to that, an insurance company could take into consideration your health, as well as your age, your demographic information, and your location. However, post-ACA, if you're on an ACA compliant plan, which most people are, the only information they can take into account is your zip code and your age. And basically, everyone is put into a big pool that falls into your particular health plan in your particular area. And the plan rates are based off of the performance of that plan in that area. So that zip code that you're in may be more healthy or more expensive than another area. So you may notice that if you move from Fresno to LA, your rates might change. Or if you move from California to Texas, your rates will be affected by those zip code changes. Also your age. So every year, everyone receives anywhere from a 2 to 3% increase just for getting older. Prior to ACA, most plans either had what's called a composite rate, where it was the same rate for all of the employees, which is the case for larger employers, usually over 100 employees or more, and in some states 50 employees or more. But for small groups and for individuals, there is a different rate for each and every age. So if you're 15 or you have a 15-year-old and they go up to 16, the rate changes. If you're a 40-year-old and you turn 41, the rate is going to be different for 41 than 40, 42, 43, 44, 45, and so on. Every year, the rate is going to change. Or for every age, the rate could be different. Also, prior to ACA, we had brackets that ranged by about 5 to 10 years. So it was 0 to 29, or 0 to 20, it's been a while, to 21 to 29, 30 to 39, 40 to 44, 45 to 50, 50 to 54, 55 to 59, and so on. So it was bracketed for the first couple of brackets. It was about every 10 years the bracket would change. And after that, it was every 5 years. Well, now that's not the case. The brackets are every single year, like I said before. So 20-year-old is going to get a different rate than a 21-year-old, 22, 23, 24, 25, 26, and so on, all the way through the ages. And once someone hits age 65, you'll notice that the individual rates go up catastrophically. I mean, there's so much. It's such the difference between 64-year-old and the 65-year-old is a lot, which is the individual health market pushing a person, or the small group health market pushing that person onto Medicare or a Medicare supplement is usually the best way to go at age 65. Again, these are all generalities. I do not know your personal situation. I'm an insurance agent. I've been doing this for 20 years. And if you have a concern, this is not health advice. I'm not a healthcare professional. This is just general information based off of my experience and my recent opinions based off of recent events in my personal life and with professional clients. Okay, again, back to what are health rates based off of? There are some health plans that are outside of ACA. Those are usually association plans, or they can be plans that aren't considered health plans. They may be like MEC plans, or those plans where they don't have a network. They just give you a straight reimbursement for every service that you may be rendered. So these are usually called maxi-med plans, or there's also MEC, which is minimum essential coverage plans, or MVP plans, minimum value plans. Those plans are usually put forth by employers that are over 100 employees and just want to satisfy the law, the legislation, the ACA, the Affordable Care Act legislation that requires a large group to offer health insurance to their employees. So if you're over 100 employees, there's special legislation put in place by ACA that does require health plan offerings to all of your employees that work 30 hours a week or more. If that is broken, then there is a penalty. If there's not health insurance supplied or provided to the employees, the eligible employees, then a penalty can be put in place. Also, some reporting is required, and if the reporting is not done correctly or in a timely manner, there's a penalty for that as well. All that was started, 2010, 2012, 2014, and beyond for large group employers. Before that, it was if you're a group, you can offer insurance or not offer insurance. There's no penalties. Also, ACA attempted to put forth an individual penalty for people if they waived health coverage. If they didn't enroll in health coverage, there was a penalty put in place for individuals. And that's why every year you get a form from your insurance company showing whether or not you had coverage and for which months you had coverage, which gets filed with your taxes every year. Prior to ACA, that was not in any existence. And that is additional regulation and paperwork that we all have to deal with, and employers certainly have to deal with every year. We also have some level funded plans, again, for larger employers, usually at least employers over 50 employees, may be offered a level funded option from their insurance company. In these cases, yes, a health questionnaire is required, and it is put through a semi-self-funded platform, and there are certainly self-funded plans available, usually for groups of 200, 250 plus. Most groups around 1,000 employees have this option where they go self-funded, where they just basically rent a network from a large insurance company and self-fund all their claims. And they only have insurance for very large claims, usually over 50,000 or 100,000 and so on. So in those cases, yes, the rates are going to be dependent on the claims activity of that employer and really just the claims activity of that employer and the health status of each and every employee. And when I started working with these style plans, the level funded and self-funded, that's when wellness, the whole idea of wellness comes into play, because the idea is that when a population, when an employer promotes health and wellness within their organization, their claims are going to potentially go down. And in my opinion, a lot of wellness programs are well-meaning, but they're very difficult to track their success. And the success that is tracked is minimal at best in most situations. In my humble opinion, it is difficult to overcome all of the bad marketing that every American has experienced since probably they can remember. All of the tabloid ads, all of the magazine ads, all of the health and fitness ads, all the health and fitness magazines have failed most Americans. We all have been lured in at some point by the magazine in the checkout line that says 6-pack abs in 6 minutes, in 60 days, or in 6 days, or, there's some sort of 7-minute abs in 7 days, or these are the 7 foods you need to eat to get 6-pack abs, or, there's just all this crazy marketing that makes us want to believe that health and wellness is achievable in this very short-term timeline, and starvation diets and all of these medications that come out, which of course some people need. I'm not against using medications or using starvation diets in certain circumstances, but I believe that most Americans have this garbage information inside their brains and these false belief systems about what is health, what is wellness, what is fitness, how to eat healthy. Everybody makes it a little bit more complicated than it needs to be. The bad news is that it takes a lot of education to overcome all of those false belief systems. It takes a lot of sometimes one-on-one coaching with people for them to understand, and also for that employer to counteract the bad information that these people are getting every single day. Think about all of the media inputs you get in on a daily basis. I've looked at the statistics before. It's tens of thousands of ads we see a day now, between our phones, billboards, magazine ads. Not that who reads a magazine anymore, but you get my drift. Everywhere we go, we're being advertised to, either overtly or covertly, in these media ads that we see, or on social media. We see a very entertaining video, and guess what? Little inputs of drink this energy drink, or hey, your favorite, social media star is, doing this crazy trick, but they also, drink this drink, or they are wearing these certain shorts, or they're using this certain band, or there's just all these little covert ways of advertising as well. So my point is that we get overwhelmed with all this information, and most of the time it's just trying to coerce you to buy a product. Not to say that all of the advertising information is false, but one way to sell a product quickly is to promise a fast result. Everybody wants a fast result, a pill, a quick fix, a surgery, something that is going to solve a problem as immediately as possible. And a wellness program has to overcome all of that madness, that huge tidal wave of information that is coming at all of the people that are participating in the wellness, that try to shut that off and focus on truth and information around how to get the individual healthier, how to get to the individual eating appropriately, or at least better than what they had been doing before, and sticking to it long term. Most people that I have seen, if they can stick to focusing on eating better and moving more on a continual basis, and do something on a weekly basis to work on their health, will improve over a year period. Over 2 years, it will just continue to compound, as long as that person sticks with that education and that constant, never-ending improvement. To get participation in a plan like this can be very difficult. And I've seen that in most situations, is if we can mirror coaching options, nutritional coaching, fitness, motivation, something like that, along with the wellness program, as well as paid incentives to take such classes from an employer, there can be some success there. My point in saying all that is that it has to do with pricing. It is something that I have seen most wellness programs are just checking a box, in my opinion. I remember I was so excited when wellness plans started hitting the market. I remember I went to a health and or a wellness conference in Las Vegas, and there were all these big wellness companies that came out that were being used by these huge corporations, publicly traded companies and the like, and they were bragging that they were saving their clients money. And they might have been, and they were at least tracking certain information that made it appear that way, or improving some of these metrics for these larger employers, which was very exciting. However, the person at the podium did not look healthy in the slightest. And that was the first thing that really caught me by surprise as I was sitting through this massive conference that the company I was working for at the time had paid thousands of dollars for me to learn about. The grand poobah of the whole conference, the last speaker, this person was at least 50 pounds overweight, did not look healthy at all, was out of breath at the podium for the first however many moments, and I couldn't help but think about the irony of the situation that I was in. Here I was in health insurance, trying to figure out how to help my clients save money by focusing on health and wellness. And the person from the podium certainly was not practicing what they were preaching. So that was my first concern. And I had to really focus and try to continue to take notes and understand exactly what they were doing that was working. But it did leave a bad taste in my mouth for the rest of my career, and even obviously to this day, because I remember it so vividly. I am also a success story from a wellness program. I might have been successful no matter what, but it did give me the catalyst. So when I came back to my agency after going through all the learning about HSAs were newer in this era. It was something that the Bush administration had put forth as a way to save people money on taxes and put aside money for saving in the long run for health insurance. And I was learning about it, and many companies at that time were pairing HSAs with wellness programs. And I put our little agency on a health program, and our employer would reimburse us a certain amount of money for taking health classes. And we had coaching, we had smoking cessation, and a couple of other services. And I did take advantage of the nutrition classes as well as the smoking cessation, because at the time I was a smoker. At some point in my life, I was smoking 3 packs of cigarettes a day. I worked at a coffee shop, and one of my favorite things to do was go down into the basement as a teenager, chain smoke cigarettes, and do inventory and drink espresso. Not the healthiest lifestyle, but it did help me get through college drinking all that espresso. But I digress. So I signed up for smoking cessation, and I didn't quit right away. I did practice quitting for a while, and I've done other videos on that. So it was a catalyst for me understanding smoking cessation, and I do really like the idea of adding smoking cessation to a wellness program. I think it's a must. I think that if an employee does want to quit smoking, they should be provided nicotine products from their employer free of charge, especially if the employer is self-funded. And my point in getting through all of that is, if you take some people come to me and they're so frustrated. Why can't I go to a nutritionist and have it covered by my health insurance? Why can't I go to a coach and have it covered on my health? It says preventive services are covered. This is preventive. I'm trying to go and get lab work done to see if I am nutritionally deficient in a vitamin, let's say. That is not covered by health insurance. That's not considered. That's not a part of their definition for preventive services. You as an individual are defining it as preventive because you're trying to prevent yourself from getting sick by staying at the optimal vitamin levels for all of your vitamins, or at the optimal hormone levels for all of your hormones, but the insurance will not necessarily cover all that. So I have seen where individuals have their own definition of what a preventive service might be, and they go to actually use it and it's not covered. The reason for that is because the insurance company has no long-term investment. They should, but they do not. They don't view it that way. They have no long-term investment on your health. Some of these self-funded employers do, which is why the larger employers are the ones that are focusing on these wellness programs and offering free smoking cessation, offering coaching to their employees, offering free lab work to their employees to catch service, some of these conditions ahead of time, or some of them go above and beyond to look at optimal hormone level, or not optimal hormone levels probably, but, vitamin levels and the like. There's certain tests that may be covered under certain wellness programs for these larger groups. And the smaller groups don't always get access to that. There are some programs that some insurance companies put forth. If you're interested to see if your employer offers any of these kinds of programs, probably the first place I would tell you to go is to look at your ID card and log in to your insurance company. So let's say at Blue Cross Blue Shield of Texas. You can go to Blue Cross Blue Shield of Texas, log into the website, register, and there will be a section where it goes over the discounts that are available to you in your area. Some insurance companies have discounts on gyms. Some insurance companies have discounts on Jenny Craig or Weight Watchers or Curves. Some of them have discounts on vision services and lenses. They may have an online provider they work with to give you discounts on lenses and frames. There's also usually discounts on LASIK eye surgery. There's usually some sort of a credit that you may be eligible for if you take a health questionnaire. So you may see a health questionnaire as an option in your portal, and some insurance companies will give you $50 or some sort of a gift card if you go in and you take the health questionnaire. So just some tips there. And that leads me into the next question, which is, what is preventive care? Had people go in, they go and see a wellness specialist or a doctor and a naturopath, and they recommend running all these tests and looking at all of my dog is making the craziest noises. I am so sorry. He is scratching and wheezing and reverse sneezing and all the little chihuahua named Casper, little white chihuahua. Okay. So preventative services that some people define as preventive in their own minds, me as a insurance novice 20 years ago, I also in my own mind would have thought prevention is to prevent me from getting sick. So that might be going to a naturopath and getting lab work done, checking my vitamin levels, checking my hormone levels, taking some supplements. Maybe my supplements will be covered and so on. However, that is not the case. That is not how insurance under ACA defines preventive. They see preventive as preventive screenings. So the screening is not necessarily preventing you from getting sick. They are catching the cancer early. It's the colonoscopy screenings, it's mammograms, pap smears. All of those sorts of cancer screenings are considered preventive and are covered at 100% if you have an ACA health plan. The other items that are considered preventive are going to be your physical exams. So once a year, you can go into your doctor, get a physical exam. They weigh you. They take a look at your tonsils, ask you if you have any questions, ask you if you want any vaccinations, and the vaccinations as well are covered at 100%. What if I have the next question is, what if I have a pre-existing condition? Can I still enroll in a plan? Yes, after ACA, if you have a pre-existing condition and you enroll on an ACA plan, they have to cover that pre-existing condition. So one person that I was speaking with said, so I've been healthy for my entire life, busted my butt, gone to the gym every day, focused on eating healthy, have had health insurance since I was 18 years old and paid for it every month. You're telling me that someone fresh off the street who's never had insurance, that doesn't take care of the health, that eats McDonald's every day and sits in a couch can just come on to a health plan and get everything covered after they get diagnosed with cancer? And the answer is yes. So there's multiple opinions on this topic alone. There's the camp of the sort of person that I just spoke about, where they go, I've done all this work. I've spent all this money on doctor's offices. I've spent all this money on, taking my vitamins every day and these supplements and gyms and trying to stay healthy. And I don't get a discount from my insurance company for doing all this extra work. The person next to me who is 100 pounds overweight gets the same rate I do? And the answer is yes. With ACA, yes, that is how the system is currently set up. So you have the subset of people that really focus on health and they want to get a discount on their health insurance for that, but that is currently that's illegal. The insurance companies just can't do it. They can't base anything off of your current health status. prior to ACA, that was the case. What would happen is you would fill out a health questionnaire, sign up for individual coverage, and the insurance company would come back and say, hey, we looked up your health records. We saw you have had cancer in the last year, and we are going to give you a pre-existing condition limitation on that condition for 6, sometimes up to 12 months. Now, if you've had, in that case, you had to prove that you had continuous coverage. So you'll even see remnants of this legislation on insurance applications to this day. So on insurance applications, you will see a section where it says, do you have previous health coverage? That section was extremely important prior to ACA. If you did not complete that and include your current copy of your current ID card that showed that you had coverage in the last 6 months, you would be given a pre-existing condition limitation. In today's environment, a lot of times I'll tell people just skip that section because there's no repercussions for not having prior insurance. You don't even have to worry about it. You can just fill out the application, move on, and there's not going to be any repercussions for not showing that you had insurance in the last 6 months. Other people that really needed coverage, I mean, there's situations where people are hard up. They've had insurance most of their life. They lose their job because they were sick and they weren't able to work anymore, and then they couldn't afford their health insurance. So maybe they have a gap in coverage and now they finally are able to get back on coverage, but they've had a condition, so now there's a pre-ex. I mean, there are those circumstances as well that I saw prior to ACA. So again, really, really sad when people were falling through the gap. So my problem is that I see both sides of the coin. I see advantages to both. I'd say probably the biggest problem right now is that people just can't afford coverage. Coverage has gone up at least single digits, now into the double digits, year over year, ever since I've been doing health insurance. Insurance costs are going up and up and up and up and up, and at some point, it's going to break. So I have a graph here that I can show you where one of the anomalies that we saw during COVID is that for the first time since the 80s, health insurance costs were increasing at a smaller amount than ever seen before since, like I said, the 80s. So there's this part in the graph where you can see the most recent survey from Kaiser, and the second figure in this presentation is called average annual increases in premiums for family coverage compared to other indicators. So that purple line that you see there, that is the family premium. So that's really tracking medical inflation. So how much did family premiums increase year over year, every year? So back in 2000, the increase was 11%, and that went up and down and up and down and up and down, and kind of came down to around 5% in 2019, and then plummeted down to nearly 0%. I believe it was 0.9% in 2022, which was well below overall inflation. Overall inflation, you can see here, is in blue, and us insurance experts were scratching our heads. We're going like, why are healthcare costs going down right now? And then inflation is like crossing over. This is the first time we had ever seen healthcare inflation go below consumer price index inflation. Part of that was because, I speculate here, I don't know exactly why. Part of this was because of COVID. Pretty much everybody was shut down from doing these elective surgeries. So I had people in my family that had surgeries that they had to postpone during this time because it was considered elective. And so that might have been an expensive surgery that wasn't had during 2020 or 2021. And then finally people were able to go back and do those sorts of surgeries in 2023. And so those costs are now catching up to people. Also, there are people like me that didn't want to go to the dentist or to the doctor in a spacesuit during COVID, so I just didn't go. And afterwards, I had to get a root canal because there was a part, one of my fillings had cracked, and I didn't realize that I had a cavity that grew out of control and had to get a root canal. Well, $3,000-$4,000 later, that's a cost that might not have happened if I would have gone to the dentist consistently for that, 2020, 2022, or 2020, 2021. So these are like these catch-up costs that we're seeing, and it was still below inflation, or it had just crossed back over inflation. It's now they're saying overall inflation is 3.2%, which again, okay, we can all argue about whether or not that's, what they're looking at. It just says overall inflation. It doesn't even say consumer price index inflation, but that's what it says down here. It says consumer price index, but anyway, I digress. So the 7% now has jumped back over that line. So it was around 0% in 2022, and now it's gone back up to 7%, which again is more consistent with what we've seen since the 1980s, which is just staggering. Year over year, getting 5-10% inflation, and a lot of this too, when you see the 10% or the 5%, this is also accounting for people downgrading their plans. So the other thing that we have seen is that people are increasing their deductibles year over year over year. So since 2006, we here on this graph, figure 8, you can see in 2006, most people had a $500 or $700 deductible. Today, the average is $1,500 to $2,500 in deductibles. So not only are people taking on more and more costs on their health insurance premiums year over year, 5 to 10%, or at least the employers are. 60% of people are covered under their employer's plan, so they may be sheltered from some of these costs and not even know that their employer is absorbing all these costs every single year. The employer or the employee, the people that are on individual plans or on employer group plans, in order to afford it, they can't afford a 20% increase to keep their $500 deductible plan. So what do? They go to a $1,000 deductible. And then the next year they get a 10%, and then a 5%, and then a 7%, and then a 20%. They get a 20%, and they can't keep their $1,000 deductible. So what do? They downgrade to a $1,500 deductible, and they have to tell all of the employees about a 20% increase this year. We have to go from we have to go from $1,000 to $1,500 deductible. Next thing you know, 20 years later, your deductible has quadrupled, quintupled, going on its way to 10x in some cases. I have some groups that have a $6,000 HSA compatible plan, that is not uncommon in today's environment. So hopefully that answers the question about pre-existing condition. And I know I circled back to healthcare costs, but that goes through. I understand, pre-existing condition limitations, why those were put into place. I do like the idea of not having pre-existing conditions, but we're in a place now where people just can't afford coverage at all. So is it better to have these pre-existing conditions in place where they're completely waived and we're all paying an additional cost for just allowing anyone to jump on and off the plan as they choose? Because what ends up happening is people go, oh, there's no pre-X, so why would I have insurance until I get sick? So they just don't have insurance, and then they only enroll when they absolutely need to, when they get cancer or they get sick or they need a surgery or something like that. And then they go, oh gosh, okay, I guess I'm going to have to pay the $1,000 or $2,000 a month for me to get coverage because I know I'm going to have this surgery. And then you get all this adverse selection, which I keep talking about. In an adverse selection, you have this pie, right? When you first start out a plan, you try to get as many healthy people in the plan as possible, which is exactly what healthcare reform did. Remember, in the beginning, they were very strict. They said, everybody has to be on the plan. We're going to give employers fines. We're going to give individuals fines. If you don't get on the plan, if you don't have health insurance, we're going to fine you. And everybody got scared and jumped on the plan. And we had surges of enrollment in those years. And over the time, those penalties have been minimalized or taken away or, just kind of brushed under the rug. Like, okay, we're not really enforcing that. It's still technically there. It's on the books just to make sure we could balance the budget so that we could pass this legislation to begin with, which is what happened. So when ACA came out, they had to put these penalties in place because you cannot pass something through either the House or the Congress without it balancing out the budget. So they came in, they said, this ACA bill is going to cost X amount of dollars, right? How are we going to pay for it? So what they did is they built in the Cadillac tax, and they built in all of these penalties for not having insurance. So it was a way for them to negotiate with the insurance companies, get them on board, get their lobbyists behind them, behind this bill. Everybody's going to get insurance. You guys love us, support us. So everybody got behind the bill, pushed it through, and said, look, we're balancing the budget. We're going to collect all this money in penalties, and we're going to collect this Cadillac tax, and it's all going to be paid for. Don't worry about it. What are you fussing about? What ends up happening is legislation passes, and guess what? That Cadillac plan, that Cadillac excise tax, I think it was supposed to come out in like 2014 or 2012, and okay, we're pushing that one out. People hate it. And, we're going to push that one out. And it just kept getting pushed out, and delayed. And the income never comes in. The way that they said they were going to balance the budget never ended up happening. And the penalties never really ended up happening the way they said it was going to. And it kept getting pushed off because everybody hates it. So what ends up happening is that, there's all this money that goes out, and then we're paying it through our taxes, and the federal government's paying for it, which is fine. But then, we're getting taxed more, and then it's like, okay, where's the money going? Is it really going to help? Is it not? And it just becomes this whole convoluted mess. So now we're in this place where our plans are worse, our plans are more expensive, and we have these pre-existing condition limitations waived, which again, I completely empathize with people that need that. However, we need to start looking at ways to get these costs down. And I don't know that it's worth having that pre-existing condition limitation in place the way that it is written in today. I think it's fair that if somebody has not had any coverage, they haven't been paying into the system, then all of a sudden they get sick and they try to sign up into the system for what everyone else has been paying. You can't just come in day one and start and rack up hundreds of thousands or $50,000 in claims that the rest of the system has to pay for it. It's not fair for everyone else that's in the plan. Can I enroll after I get sick? Yeah. In today's, the way healthcare is with ACA, you can completely opt out of the system, and then the moment you get sick, you can enroll. You do, in some cases, have to wait till open enrollment. There was a time during the pandemic where they waived that. Anybody could enroll at any time for like 3 years. So you could literally not have coverage and then get sick and say, oh, you know what, I'm going to get coverage this month, and then cancel it and then enroll back in and go in and out that way, because there were no limitations because it was considered a health emergency, right? Well, that's gone away. So people do at least have to wait till open enrollment every year to enroll. So if you get sick in January and you want coverage, you can't necessarily just enroll. You have to wait until the next year's open enrollment. So that's kind of the give and take. There is some give and take there. I will concede that. What is happening to the U.S. population? Are we getting sicker? Are we getting healthier? Are costs going down or up? So yes, we are getting sicker every year. I don't think that's again, it's not all Obamacare's fault, is part of my point. Yeah, Obamacare didn't really help. It did they put in a lot of restrictions for us as brokers to really get creative, try to find solutions for managing these healthcare costs. It is frustrating that it's this overarching, like, you must do this. This is the definition. This is how it has to be covered. Not giving us any, making sure everything is unlimited. It's very patient centric in that way, which is great. I appreciate that. And I appreciate the idea of it protecting people against pre-existing condition limitations. There are some things that, insurance companies aren't little angels. They try to not pay things. And I think it's important for there to be watchdog groups and ways to protect patients. However, I'm just saying that it's getting to the point where people just can't afford it. And we can't just keep, like, my entire career, like I said, even before this whole 11 years of ACA and rising costs, we had rising costs before ACA. Too. So it's not just that. My thing is, America is getting more and more unhealthy. So let's see. So I Googled it. It comes up with this 11 years of Obamacare. Again, it gets political. It goes to the sports article. Healthcare costs in the United States have consistently risen over time with few instances of actual declines. For example, in 2022, national health expenditures increased by 4.1% to $4.5 trillion, which is $11,493 per capita. That's per person, maintaining growth rate comparable to pre-pandemic levels. While the overall trend shows rising costs, there have been periods where rate increases have slowed. Notably, from 2010 to 2020, the average annual growth rate of employer-sponsored family health insurance premiums decreased to 2.8%, down from 5.7% in the preceding decade. Again, that is arguable. There's lots of data showing different. This deceleration, and also just my personal opinion, working with employers and hundreds of employers over the last 20 years, most everybody gets, most of the time, 10%. If you're under 10% every year, like, the employer's like, awesome, like, let's go. Let's renew as is. When you start getting to the double digits, it gets real hard. This deceleration is partially attributed to implementation of the Affordable Care Act and other healthcare reforms. Despite these periods of slower growth, healthcare costs have not experienced significant declines. Factors such as technological advances, which are deflationary. So you would think, if we're having all these technological advances, why are we seeing zero deflation in this industry? An aging population and increased utilization of healthcare services continue to drive expenditures upward. I have a whole video on PBMs and pharmaceutical companies and pharmaceuticals, and I even did a thing on semaglutide stuff. I did a whole thing on that, not picking on that exact drug, but I think it's an example of our healthcare system. These drugs should not be $1,000 a month. I mean, the materials used in a lot of these drugs should be pennies on the dollar, and things are artificially inflated in the pharmaceutical industry to get money out of the system. It's really, really incredible. Increased utilization of healthcare services continue to drive expenditures upward. Efforts to control costs, including policy interventions and efficiency improvements, have primarily aimed to reduce the rate of growth rather than achieving outright reductions in spending. Because the problem is the health of the nation. You know, if people get healthier, they're going to go to the doctor less, they're going to use less pharmaceuticals. But again, it takes a mindset shift of the person, of the individual. In summary, while the pace of healthcare cost increase has varied, the overall trajectory has been upward, with no substantial periods of decline in the United States. So again, I don't know the solution. I even attempted to be a healthcare coach for 10 years. I worked with hundreds of people on their personal health to try to impact as many people as I could, to try to spread the message of consistency and education and practical implementation of a whole foods diet. And I helped a lot of people, but again, can't help everyone, you know, so I'm a little bit jaded in that area because I have been arguing with people about you know, you sit down with a client that you're helping for, you know, to coach on health, and you're trying to explain to them, eat as much meat as you want, eat as much protein as you want, you know, get rid of the bags, anything in a bag, anything that's processed, get rid of it. And they go, oh, okay, what about keto? And I found this, you know, bag of keto chips, so that means I can eat it, right? Because I'm going to do this keto diet. And it's like, just do the keto with the whole foods, and you know, that's a marketing thing. That bag, they're trying to market you something. Leave it alone. Maybe 10, 20% of the time. Yeah, get the bag, get the junk food, eat the cake at the party. But 80 to 90% of the time, try to eat, hamburger meat, or, you know, if you're vegetarian. I don't know a whole lot about the vegetarian diet. I tried vegetarian and vegan. I was, you know, went to a Seventh-day Adventist school when I was a kid. I, you know, went all in on, I've tried every diet, let me tell you. I have done the raw foodist diet. You cannot come step to me on being crazy with your diet. Like, I've done I'm a woman, and I've been studying I've read like all these diet books since I was like 12. I've been obsessed with it. So anyway, telling people that they can have as much protein as they want and to leave, you know, the carbs for days that you work out or for later, you know, is just, oh, but what about this? And what about that? Oh, and I saw this post and I saw this Instagram and this guy said and that guy said. They're trying to justify making these changes. It's like, okay, well, just stick to the plan. So we've got to stick to the plan for 30 days to see if you get the results. And if you get the results, then maybe we can change something after that. But you can't go one day on a plan and then change it every day and expect to know what you're doing if what you're doing is getting you the results that you want. So anyway, I digress. Thank you for hanging out until the end. Hopefully you found this interesting and useful, and hopefully you learned something. If you did, please share it with someone. If you're a CEO, CFO, business owner, HR professional, and you want to talk to me about your business insurance or employee benefits, please see the link down below and schedule a meeting with me. Happy to talk to you. It's absolutely 100% free. Thank you for hanging out until the end, and we'll see you next time.